Welcome to Main Street Minds with your host, Amish Munshi. This is where industry leaders and seasoned pros share their secrets to success beyond limits. Let's dive in.
Hello and welcome to Main Street Minds. Today we have a very special guest, Ashley, over here with us, and I'm excited to present him and have him on our show today. He's in one of my most favorite places in North Carolina, working on deals that are just magical. And the more important part is how does somebody become as successful as Ashley, and what are some of the things that he had to go through. So looking forward to learning all about Ashley and like what is involved in doing investments in real estate. So without any further delay, let's get started. Ashley, tell us all your secrets. How did you get started?
Yeah, great. Well, Amish, thank you for letting me be a part of your podcast, and I'm grateful for the time. How did I get started? I've always been in real estate, and I literally grew up in the mom and pop version of what I do because when I was in junior high and high school, my dad started buying old houses near the campus of a university, and then we would internally subdivide them into, 2 or 3 apartments for the students to live in. And so I was the one there with the hammer and the rake and the shovel, and I was doing the work to, renovate these things and then maintain them. And then as I grew, I went into the then triplexes. And what I kind of confirmed to myself was what I already knew. And that is that, hey, I love this business and I love the passive income that it gives me. Or really at that time it was pretty active because I was actually doing a lot of the management and stuff myself. But the point is that it kept paying.
Yeah.
Whether I necessarily clocked in or not. So I like that. And then I set some different financial goals, and I realized pretty quickly that I was already mathematically eliminated from reaching that goal, meaning I was going to die before I reached my goal at the current pace. So I had to somehow scale up.
Yeah.
And in 2013, I bought my first 10-unit place.
Mm-hmm.
And then from then it was a 32 unit, then a 35 unit. And the most recent purchase was a 196 unit place. And that was in February of this year.
Sweet. Nice. And it was a difficult time to kind of do transactions, right? Like there was just so much uncertainty in the market, and everything was like going all over the place. Either we are going to the economy is just going to go, it's a doomsday. And then there were other people there like, this is the best time of of our life. This is the opportunity. So in
Yeah.
dynamic environment, like how do you analyze the deal, and like how do you review it?
I remember, so the 32 unit deal I bought in 2018.
Yeah.
And that was right before the world went crazy, like as far as real estate values and interest rates and all that. And then from then on, it was probably 4 years before I found another one that made mathematical sense to buy, or at least from my perspective. And my perspective is that the property I have to be able to make my money and returns based on what it's doing today based on the sales price. And what I found was that like 2019, when COVID, and then shortly thereafter, the values were so high that the spreadsheet didn't work. And honestly, I remember several times being frustrated sitting here at this desk, like something has got to be wrong with my spreadsheet because I don't know how I can't find anything that makes sense, and yet all these people are still buying properties.
Yeah.
It doesn't make any sense.
Yeah. And now we know what happened.
And I'm afraid, and again, I would never wish any bad on anyone, but I'm afraid we're about to find out what's going to happen.
Yeah.
Yeah, you're right. You're
Yeah.
right.
Fortunately, I think the rates are getting better, but nowhere close to anybody getting the expected returns that were promised.
Yeah, no more 3% loans and things
Yeah.
like that. It just doesn't seem to be in the cards. And yeah, so for that reason, I think it's good. I mean, I think our conservative nature is good because it keeps us from making bad mistakes with our own money and with our investors' money. But it can be frustrating when you have to underwrite so many deals just to find one that works. But that's just kind of part of the game, you know?
Yeah, yeah. And even when I started my career, like I was analyzing deals, I was like, I'm in the Northern California market. I was like, this makes no sense. Property
Yeah,
selling at 2 cap, even when the interest rate is at 4. And I was like, unless I put like 60% as down payment, this thing barely even cash flows. And
right.
yeah, and people and some of the valuation still holds up, and it just doesn't make sense. And but when we look around, like there are some opportunities that do come up. Uh, so
Yeah.
we may
I'm
have
noticing now that the deals that come across my desk are much closer to making sense now than they have
yeah,
been in the past several years.
yeah, exactly. And I just met somebody a little while ago, and they said they finally think homes are affordable, and I was like, I have not heard that phrase in 7 years.
Right. Yeah, I don't think, and I haven't heard it yet here either. Maybe
Yeah,
it's coming. I hope it is because it needs to be, but
yeah,
it's definitely a challenge. You know, that affordability thing is, I don't know, it reinforces one of the reinforcements of why we think multifamily is a good investment because, you know, even though rents have gone up over the past several years, not so much in the last year or two, but it's still, you know, maybe a third cheaper to rent than it is to the overall cost of
yeah.
ownership. So,
And I think that trend will continue. Like the difficulty level to buy a house is only keeps going higher, kind of because it keeps getting easier to get financing, like with
mhm.
less and less and less down payment, with lesser credit, with less down payment, with higher loan amounts. I think
Yep.
that like over here, somebody with a 500 credit with the 3% down payment can buy a $1.2 million house. No
Ah,
wonder there is no house less than 1.2 million.
right. Yeah, exactly right.
Yeah.
Exactly right.
So, so as like tell us a little bit more about some of the asset classes you operate in, and like what are like multifamily is a great asset. North Carolina is a great market. So, what are some of
Yeah.
what are like within multifamily, like between the different uh, class levels, or like what are how are you sourcing deals? What are you doing right now?
Okay. Yeah. So you know, the things that we currently own would be, they would be classified as class C, C plus, and maybe some B minus.
Mm-hmm.
And we've made a nice career of that, and we've made money in that asset class, and it's very good. We are on a path for our business as a whole is, you know, right now we're at around 300 units, and what we're trying to do is get to 1,000 units,
Mm-hmm.
and we would like to move towards the B plus, A minus. It's a little bit newer, a
Mm-hmm.
little bit maybe larger location, things like that. As we
Yeah.
move up, you know, buying 200 unit or more at a time. That's kind of that's our that's our criteria. That's our
Sure.
focus.
Yeah.
Most of the deals we get, well, I don't want to say that. We've bought things with direct to seller mail campaigns. We've
Mm-hmm.
bought things that were on the MLS. We've bought things that are through multifamily brokerages. And, you know, it's important, I think, to have everything is relationships, first of all. No
Yeah.
matter if it's raising money or borrowing money or finding the deals, it's all relationships. It just depends on who you have the relationship with.
Mm-hmm.
And so we like to have good relationships with lots of different people so that we have access to deals from lots of different sources. And again, when we see one, we underwrite it. We look at financial performance and what we think we can do with it, and we decide if it's worth it, we go to the next step.
Yeah. And like what's been the appetite in the market? Like, do you see the same level of demand for A versus B versus C? Like, what's the market demographics?
Yeah, I think that it's interesting. I've learned a lot in the last say 18 months that we've been working with this larger property. So we bought that one in February of 2025 for 21,250,000.
Mm-hmm.
And the previous purchase was like 3,600,000. So it was a big jump for us as
Yeah.
far as the scope of the deal. And so we've learned a lot. And one of the things that I've learned is that there are different investors. So obviously we can't do this alone. We
Yeah.
we have limited partner investors who
Mm-hmm.
bring the capital, and then we operate it, manage it,
Yeah.
those kind of things. But my point is this: the different investors want different things. And
Mm-hmm.
you get an investor, if you're raising money $50,000, $100,000 at a time, they tend to have different return requirements
Yeah.
and like time horizon requirements
Yeah.
than if you're going to try to have a family office or a high net worth individual write a $5 million check. They're less concerned about quarterly distributions normally, and they're more concerned about preservation of the capital and
Mm-hmm.
internal rates of return over time and things like this.
Yeah.
So I think that there is more than enough money in the world to buy anything that you want to buy.
Yeah.
It's amazing to me how much cash is available to invest. And one of the tough parts has been the borrowing, like the lending world has been
Yeah.
pretty restrictive.
Yeah. And
Yeah. So you have to have a lot more of the capital to
yeah,
come to the
getting
table.
more and more restrictive as uh
Yeah.
yeah.
I know.
Although
I wish it would go the other way.
yeah, I did mention about it getting easier for the first time home buyer, but the guidelines are more and more strict. Like the person still needs good income, uh,
Right.
something reasonable to like no nothing bad on their background checks. Uh,
Yeah.
yeah, like all of those criterias keep getting more and more strict.
Yep.
Yeah.
Yeah. Yeah, that's very true. So we try to stay close to the market and our relationships and try to figure out what do people want. To me, there's a market for the investors also, just like there's a market for the price. And the investor money, they have a certain price, if you will, that it takes to get their money. And you say, well, what is it? And then they say, well, it's this. And then we have to go out and find a deal that meets that criteria. It's pretty
Yeah.
simple.
Yeah. So I think that brings us to a very important point, right? Like, do you generally raise money first or find a deal, and it's always a chicken and an egg situation? So like how did you overcome that in your career? Like, how did you reach the scale that you are at?
Yeah, I think we have not started a fund. We've not ever raised money in advance of having a deal.
Mhm.
But we have fostered relationships
Mhm.
over, decades, and are constantly, even today, I've already had 2 meetings today with, future investor relationships. So it's a constant a relationship thing for us. And then
Mhm.
we stay in touch with them with webinars and
Mhm.
emails and things like that, in-person events sometimes, so that they're ready when
Mhm.
we find the next deal. And
Yeah.
that doesn't mean we won't do a fund. Maybe we will. We've discussed it. We just never have done it.
Yeah. Makes sense. Yeah. So
Yeah.
basically, you first focus on the deal, and the money kind of it builds comes from the relationships you have
Yeah.
fostered over the
Yeah.
decades.
Yeah. And
Yeah.
my experience has been, if the deal is good enough, then
Mhm.
there's usually plenty of money to go with it.
Yeah,
Yeah.
exactly. So, tell us a little bit more about like do you foresee yourself being within the North Carolina market, or like expanding outside for the 1,000 unit goals that you have now?
You never know exactly what the future is going to hold, but
Mhm.
from what I see, there's more than enough of our target asset in North Carolina
Yeah.
to get us to that 1,000 goal.
Mhm.
There's more than enough. Now, that's not to saying that if someone comes up to me and says, "Hey, I found this asset that meets your criteria and it's in South Carolina or Georgia," doesn't mean I wouldn't go there.
Mhm.
It just means that there's so many things to analyze that
Yeah.
we kind of have to we have to stay focused a little bit.
Yeah.
And even looking at North Carolina, there's still so much there's more than we can even really
Yeah.
analyze.
Yeah.
So until we run out, until the supply is scarce enough, then we probably will focus on the North Carolina market.
Makes sense. Yeah, that's really important to have like a good focus and like know what to expect, because otherwise there is deals coming from everywhere and like it becomes like, yeah, and then there is a reason why every market has a different cap rate, every market has a different expectation.
Right.
Some are tenant friendly, some are landlord friendly, some are uh have like very little nuances about different places.
Right.
Yeah.
Yeah, I agree. I agree. Um, there's one thing I wanted to mention too. Sometimes people ask me, what motivates you
Mhm.
to keep doing this? And I'm trying to, by the way, we're trying to remember that we are real estate investors and we are not. I'm not here to create this big monster machine of payroll and staff and all these things that I have to, because then I worry that I would be put into a position where I would feel like I have to close a deal just to get those acquisition fees and asset management fees just so I can make the payroll.
Yeah.
And to me, that's not the type of investor that I
Yeah.
want to be. To
Yeah.
me, I do this because it's important that I can control my own time
Hmm.
and be where I want to be for the people that I want to be there for. And when if you work for someone else and you have to clock in to get paid, a lot of times you don't have that luxury,
Yeah. Yeah. It's less
and
personal.
yeah, you have less freedom and less control, right?
Yeah.
Yeah, and so I remember, I I told you I was buying those like uh, single family duplex triplex. And then in 2018, I bought that 10 unit place and I still own it. And that was the first like real like multifamily.
Hmm.
And what happened, I had always wanted to go bigger. And,
Hmm.
I read all the books and I went to all the seminars and,
Yeah.
I studied this a lot, but I never really took action to go to the bigger properties.
Hmm.
And then in 2017, I had a heart attack.
Oh.
And I was like dead and gone, and they had to shock me back to life like 5 different times that day. And so it gave me a whole new perspective, as you might imagine.
Yeah.
And so what I did, it just gave me, among many other things, we could have 2 or 3 podcast episodes about what happened in that
Yeah.
time, but it gave me
This is
the
very
freedom
interesting.
to eliminate some things in my life that I felt like were holding me back,
Hmm.
and people and activities and where I focused my time and attention and money. And so I decided that if it didn't serve that purpose, that goal that I wanted to get to, I just
Yeah.
moved it out of the way.
Yeah. Yeah.
And I think that I don't think I know that having that feeling of
Hmm.
being able to put things where I wanted them, that allowed me to make the progress that I needed to make.
Yeah, that is very very important, and it's amazing how sometimes it takes a life event to for us to realize that, and like everything that most mentors and coaches say, hey, we should create goals once a year, like look at analyze things once a month or like a little more periodically. We should have 5 year goals, but it takes many times it takes a life event to like tell us like this is it, like this is where I'm going to decide what I really
Yeah,
want, where am I, what am I wanted to do, like
that's
what's
right.
going on, and hopefully
Yeah,
it
you're right.
can do it without having a life event.
Yeah, you're exactly right. so many times we say, well, I'll do that later, or I'll do a little bit at a time, and then someday I'll magically know when it's time to do this. And,
Yeah.
what you realize is that it doesn't work that way, and
Yeah.
you just like, if you don't do it, what's going to happen probably is you're just going to wake up and it's going to be game over and you didn't get to it.
Yeah.
And so, I got to experience that game over without but I got to go again. I got
Yeah.
I got a new go at it. And so I decided I would make the most of it and do the things I wanted to do. And I'm grateful. I love so much what I do, and I'm very grateful for it.
Yeah, that is the best part about it, right? Like being happy about what where you are right now. So tell us
Yeah.
on that same theme, like tell us more about what do you like to do outside of work?
Yeah. Well, I've got a 14-year-old daughter and a 10-year-old son. And
Okay.
so, they're at that age where there's lots of activities and they still like to do things with their dad. And so
Yeah.
I do lots of things with the kids. I coach soccer, and, I volunteer at school and do all those types of things. And I like to, I do things with my friends. I like to
Mhm.
play golf and snow ski and travel and do all of those types of things. And recently I've gotten into making YouTube videos. I haven't started a podcast, but I like what you do because it allows you to share your experience and
Yeah.
help other people take the next step.
Yeah, and
Um,
I get to learn so much about so many different people. I get to know what's happening across the country, at least for now. That's all that my podcast is reaching out. Get to know so much about what's happening. So
yeah,
it's a great way to network.
absolutely. Yeah. So yeah, and my career allows me to do the things
Hmm.
that I probably wouldn't have been able to do either financially, or most likely it would have been difficult to do time wise,
Hmm.
because I would have felt like I couldn't take the time to do this or that, or maybe I really actually wouldn't be able to take the time to do this or that without getting fired or whatever.
Yeah, yeah, absolutely. So as we always I like to ask as we come closer to the end of the episode, I always like to ask, where do you see yourself in 5 to 10 years from now?
Boy, that's a great question. I ask myself that a lot. Hopefully going to, parents weekend at my kids' college and like the, fun things like that. But, um, I'm not, I'd like to still be kind of doing what I'm doing,
Hmm.
in that building the portfolio.
Hmm.
Uh, and then, but maybe even less, not, I don't know how to say it. We're working so hard now to streamline all of our processes and procedures, and the SOPs, the KPIs, all of the
Yeah,
acronyms, right?
yeah.
And for the whole purpose of scaling up and being able to manage more and more things, from our control pilot seat, if you will.
Mhm.
And so hopefully we reach that goal in less than 5 years, and that we are able to really build our portfolio. Um, I love the investor relation part of what I do. I love to raise money. I love to talk to people.
Mhm.
And so I can see myself continuing to do that, and maybe even having some live events or annual trips with our investors, and things like that. But I would say largely I'm pretty happy with the way things are going, and I would be just as happy to kind of have a similar lifestyle then that I do now.
Yeah, so more like an organic growth, like as it comes along, and
Yeah,
yeah, that
yeah.
that that is really great. So yeah, as we come close to end of this episode, I do like to conclude with asking like, what's the best way somebody can reach you?
Yeah, LinkedIn is always a great place.
Hmm.
Ashley B. Garner. But our website also is great. It's abgmultifamily.com.
Hmm.
And that's once you get to the website, then you can get to everything else, all of the social media, our even my cell phone number is on the website. So if somebody wants to call me right here, then they can call me or text me right here. We're kind of we're just real people, doing our thing.
It's always amazing. We are able to bring about all the sophisticated setup of the syndications or the purchase or the operations, but it's still normal people. You can actually connect with real people, and that I think that's been the best part over the last, I would say, 10 years. Prior to that, it was always like larger institutions like doing work, and we couldn't speak with a person that was actually making decisions. Right.
Right.
Now
Yeah.
that's
Yeah.
changed.
Yeah. If you call like me, it won't be press one to get to customer service. It'll
Yeah,
actually be right here to me.
yeah, and it's the same number to text and like connect with the same person.
Yeah.
Yeah.
Yeah. It's really great. And we do have opportunities, we have live opportunities to invest right now.
Hmm.
If people want to get in the multifamily game at, $50,000 or higher,
Hmm.
then we have opportunities right this minute that somebody could get involved in. And again, that can be found on the website.
Oh, sweet. So that's always good. And so people can actually reach out to you and kind of partner up with you and like
Yeah,
take benefit of the whole experience that you have of investing in North Carolina
100%.
and helping you at the same time with help getting them transition to a class A or a B plus asset class.
Yes, yes. It's truly a win-win. That's one of the things I love most about this, that we get to accomplish our goals at the same time of helping other people accomplish their own financial goals. So it's really, really great.
Yeah, that's amazing. So reach out to Ashley on the website. I'm going to mention it in the description again. So
Okay.
it's been pleasure having you on the podcast and taking time off on a busy Wednesday and spending time with us and enlightening us with all the knowledge that you have.
Well, I appreciate the opportunity once again. Thank you very much.
That's a wrap on today's episode of Main Street Minds. Want to share your journey with our audience? Head over to mainstreetmindspodcast.com/guest to apply.